Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.
What's up, guys? Mr. Fit to Flourish, and today I wanted to talk about 3 simple things that you can do to transform your trading when it comes to selling contracts in options, selling contracts too early. So I got this question the other day by one of my awesome followers, and the question was, hey, what do I do? Because sometimes, what does it say? Let me read it real quick. I tend to sell contracts early before they reach profit because sometimes I get scared and sell. Do you have advice for that? Yes, I do. I have really good advice for that. I want to show you guys the chart so you don't have to look at my face and this Burberry, you feel me? No, I'm just kidding. But yeah, I'm going to show the charts real quick so that you can see exactly what I'm talking about when it comes to not selling option contracts too early. All right. So the number one thing that you're going to need to do, I'm going to give you guys some gas. I always do, right? So like, share, subscribe, all that YouTube-y stuff. Do it right now because this is going to be some free gas, okay? Free gas right here. So the number one thing that you need to do is you need to decrease your port size. Holy moly. And I bet you didn't think about this. But you need to decrease your port size. The only reason that people get scared in trading is because, what are you scared of? You're scared to lose, okay? You're scared to lose. Well, what are people scared to lose? People are scared to lose a lot of money. Think about that. If you're not, what if I said, hey, put $10 in this trade right here, okay? Put $10 in this trade. Would you be scared? I promise you wouldn't. Okay, if I said put $10 in this trade right here, if whether or not I say, hey, put $10, it's going to go up, $10 is going to go down. The stock's going to go up, it's going to go down. You don't care, okay? You don't care because the amount of money is so small, it's negligible, okay? But if I told you, hey, go to your bank account, instead of withdrawing $10, I want you to go to your bank account and withdraw $20,000. Put $20,000 into this trade, and you'd be like, whoa, hold up. I don't know if it's really going to go up. I don't know if it's really going to go down. What if I lose this? Your heart's going to start to beat a little bit, right? So a lot of people don't realize this. Okay, it's about self-awareness when it comes to trading. Trading is 90% mindset and 10% skill. All right, 90% mindset. And the mindset is that when I'm trading options, I need to understand that options are wasting assets, which means that it can go to zero. Okay, whatever you put in can go to zero. And your heart beating and you getting fearful is you realizing this. Okay, you're actually realizing this. Okay, you understand this, you're realizing this, and you're like, oh man, this is extremely risky what I'm doing here. This is risky business. I need to mitigate my risk by decreasing my risk, decreasing my port size. That's the number one thing. Whenever someone says either I'm not profitable or I'm getting scared, I've been trading for a long time and I'm still losing money, what I tell them is you only lose what you put in. You can only lose what you put in. So you're controlling your destiny. You're controlling how much you lose. So I'm doing this $500 account challenge. It's a growth account, right? And everyone's watching and they're like, oh shit, it's actually growing. Everyone was thinking like, oh, he's going to blow the account. The account's going to get blown. But no, I understand the 2 things about trading. Number one, I'm going to put in a small amount and I'm going to consistently get small gains. And then my account's going to get bigger and then I'm going to put larger amounts, but it's still going to be small amounts. Okay. And then over time, we get the compound effect taking place and my account's going to be insane. Okay. So we're taking $500 to $36 million guaranteed. Okay. Anyways, what you need to do is decrease your port size, okay, which means how much you're putting into a trade. Okay, so the question you need to ask yourself is how much am I comfortable losing in the day or losing on this trade? So in the day, if your account, let's say you have most people have like smaller accounts. So let's say you have like a $10,000 account. Okay, you have a $10,000 account, and you're like, if I lost $100 and I went to $9,900, I'd be okay with that. So then I would tell you, okay, well, if you put on a trade and you lose $100, you'd be okay with that, right? And you say yes. So you can think about your trade from that perspective. Okay, well, I'm going to put $100 into this trade and I'm going to let it ride. If it goes to zero, then that's okay because I only lost $100 on the day. Or you can think about it like this: I'm going to put $200 into this trade, and if it goes down 50%, I probably know that the trade was invalid. So 50% of 200 is $100. Okay, so think about it like that and decrease your port size. Instead of what a lot of people are doing is they're blowing their account because they'll put in 10K. Either you don't know how to trade or you don't spend enough time on the charts, and they'll try to put on a trade, and they'll put the entire 10K into this trade. Okay, they'll put the entire 10K into the trade, and they'll be betting that this is gonna go up. They're like, oh, this is gonna go up, right? They'll put the 10K in the trade, and then it goes down, and then now you're down like 7K. When you could have tried just putting $200 in, and then you go down 50%. Now you're only down $100. But if it does go in the direction that you thought it was, that 200 can go to 400. But I'm telling you right now, it's going to allow you to relax with that little money in. You're going to be relaxed. You're going to focus on the charts, and then you're going to allow the trade to play out longer. So those are the things that's going to happen when you decrease your port size. You're going to be relaxed. You're going to be focused on the charts instead of how much money can I make? How much money can I make? You're going to be focused on the charts and setting good trades. That's going to allow you to build your confidence. You need to consistently trade with small size until you're focusing on the charts so much that you're finding good setups. Okay. The second thing that you can do, that's the number one thing you need to do though. Decrease your port size. I promise you won't be getting out of trades like, oh shoot, I'm scared. Because the fear is coming from you knowing that there's a lot of money in the trade, that it's like so much money that you're scared to lose that. Like, what if it goes to zero? But if you put $100 in the trade, and I promise you'd be like, I don't care if that 100 goes to zero. Man, I got $10,000 right here in the bank. I got 100K in the bank right here. Or my account is 50K, $100. Who cares? Then you focus on the chart a lot more, I promise you. And it would also allow you to let the trade go. Okay, it would allow you to let the trade develop, because you'd be like, okay, well, I think that we can hit this target here, and then I think we can get to this target, and then since it's only $100, you're not gonna be trying to pull out too quickly. As opposed to if it was 10K and it went to 10,100, blah, let me get out because I don't want this 10K to go down. I don't want it to go the other way. You'd be in this fear mindset. Okay. All right. The next thing that you need to do besides changing your port size is you need to focus on good setups. Okay. There's always going to be a time in the market where a setup is so easy to read that it's like, all right, yeah, this is guaranteed. There's no way that this is going to go up. Like you look at this chart, like, yo, the volume R size down, we're below the 9 and the 20. The whole market is falling out of the sky. Trump just said tariffs. He said recession. Jerome Powell said recession. Like everything is pointing in that direction. That's like an A+ setup, and you're trading with the overall trend. That's an A+ setup. So the other thing you need to do is wait for A+ setups. So, okay, number one, decrease port size. So I'm giving you guys the sauce to the spaghetti. We're gonna make a really good meal, and this meal is called not being scared to stay in trades. Okay, you're not being scared to trade, being confident. So decrease your port size and decrease it dramatically. Okay, so whatever you're thinking about putting into a trade, decrease that by 50 to 75%. Okay. Decrease port size, that's the number one thing. And then number two is wait for A+ setups. Okay. Now an A+ setup is there's discrepancies in like what I would think. So it's subjective pretty much. Like you might think that, oh, this is an A+ setup, or I might think this is an A+ setup. Essentially, an A+ setup is if you backtest and if you look at the charts, it's a setup that just feels like it's a no-brainer. Okay, so who cares if I say like, oh, it's when we do an ICT order block tap or a fair value gap fill, that's the A+. Or what if they say, oh, well, it's the volume R side going up, we're with the trend, there's news, like whatever it is, the A+ setup is typically a setup that has so much evidence that a stock is going to go in a direction that if you took the trade in the other direction, you're literally stupid. You're literally stupid. Okay. So that's what an A+ setup looks like. So I don't care about anyone's like definition. An A+ setup is when it feels so easy that a kindergartner can do it. Okay, so you need to be waiting for those setups. Now, if you're trying to take setups that are pretty risky, for instance, we're in a bear market right now, and you're looking to take calls when there's a lot of downward pressure, that's going to feel pretty risky, right? You're going to be like, oh man, like I don't know. We just got this huge sell, and then you're going to try to take calls here because we got a huge sell off. You're like, oh, well, I think we can get calls back to the upside. If you're feeling like, I don't know, maybe, then don't take the trade. The only time you should take trades, and I've seen really good traders do this, and this is what got me to the Corvette level, to the next level in trading, is I stopped guessing. Okay, like if I have to guess, should I get in the trade? I'm not taking the trade anymore. Like sometimes I'll still do it because I'll feel some FOMO, and I'm human. I feel FOMO, but you get rid of that. Okay, develop a setup, or look at the charts and see what setups always go. Okay, and wait for that setup, and it's gonna take patience. You're gonna have to be a little bit more patient. Sit on your hands, and you're probably gonna feel antsy a little bit. Like someone's gonna be like, "Oh, I just got a 20% gain. I just got a 30% gain," and you're like looking at them like, "Dang, I need a trade. I want to get a gain. Oh, I want to get a gain." Don't do that. Don't do that. Wait for A+ setups. And again, these are setups that are just super easy. It's literally a no-brainer. Okay, so when it feels like, oh, bro, obviously this is going up, like obviously. Okay, and you've felt those trades before. You've seen it, like an announcement is made like, oh, there's a recession, and the stock market is just falling and falling and falling and falling, and a level was broken. Everything is pointing in the direction that it should, like, oh, this should go down. Everything's telling you it's an easy trade. That's what you need to wait for. Okay, but if you're trying to get into a trade where it's like, well, this is up, but this is down, and then maybe let me just take the trade. Don't if you feel yourself thinking that, don't take the trade. So take notes on how you feel when you're trading. Okay. So number 1, decrease port size. Number 2, wait for A+ setups. And then number 3 is set a realistic stop. Okay, set a realistic stop. Okay. So what is a stop? A stop is basically an area where you would know. A stop is an area where you know that the trade is not going to go in the direction that you thought it would go. Okay, so for instance, a Wall Street stop is like this. I need to do this a little bit quicker. This video is getting too long. This video is getting too long. All right, so a Wall Street stop is like this. A Wall Street stop is, hey, if this is my signal bar, then I would enter on the open of the next bar. So if this big green bar is my signal bar, then my entry would be on the open of that next bar. And I would try to get calls, right? I'll try to get calls. Well, how do I know that these calls are going to go into the garbage, like they're trash? How do I know they're trash? There's a couple different ways, but the Wall Street way is, okay, well, if I set a stop one tick below, if we close one tick below this signal bar, then we know for sure that this is probably going in the other direction. So we were thinking that this was going to go up, but it actually ended up breaking below my signal bar, so we know this is going to go down. And when your stop is hit, you need to exit immediately. So again, I need to set a stop, okay? I need to set a stop. And I need to be okay with losing sometimes. You're going to lose sometimes. Okay? You're going to lose sometimes. So you need to set a stop, and you need to respect that stop. Okay? Respect that stop. Oh, actually, and then one more thing that I wanted to say to kind of hold on to your trades a little bit longer is stop getting 0 DTE options. Stop getting 0 DTE options. Okay, a lot of people are getting 0 DTE options, and you're getting cooked. A lot of people are getting cooked. 99% of people aren't skilled enough to get 0 data expiration options. 99% of people, okay? Because those options are very risky, and they should only be taken when there is extreme momentum in one direction, and it's an obvious A+ setup. That's the only time 0 data expiration options should be traded. Okay, so otherwise, allow the trade to play out, and you need to give your options more time. Okay, so give your options more time. Give options more time. So probably get a week or 2 weeks to expiration options, because that way, if what's happening is you're getting into the trade, and then if it pulls back a little bit and you get scared and you exit, you're probably getting scared because the your option contract got killed because of theta. Okay, but if you give your options more time, it won't, on a 20-cent move back up, it won't hurt your option contract too much, and then you'll allow the play to kind of play out even further. All right, so hopefully this helps when it comes to exiting plays too early, getting scared and selling, because the reason you're getting scared is, again, number one, your trade size is way too big. Off the rip, your trade size is way too big. I know, guaranteed that's what's happening. Guaranteed that's what's happening. Number two, you're probably picking iffy setups, and you know they're iffy. Okay, wait for A+ setups. Number three, what did we say? It was number three. Number three, you probably don't even have a stop, and you're like, oh shit, if this goes to zero, then I'm done for the day, or something like that. I know that I'm thinking from where I was thinking when I used to be on the come up. Okay, and then number four, stop getting 0 DTE options or short dated options, and give your options a little more breathing room. Give them some more time so that theta doesn't kill your option contracts. All right, hopefully this helps someone out there. It's your boy, Mr. Fit to Flourish, and I'm out of here.